welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 20 minutes. Today, we're going to be short and sweet. We had a special guest last Friday, Kurt, the founder of Options Alpha, and we had a great discussion. So I don't have a trade to talk about, but you definitely want to go back and listen to that discussion on Friday. It was an excellent show. I must say so myself, and really enjoyed that conversation. Now, this week, earnings. That's what it's all about. Jay Powell is still talking. He's been on the Hill forever, I feel like, but today he's going to have a conversation at 12:30 Eastern time and continue to talk about if we're going to lower interest rates or not. The market so far is taking his comments as there is a potential. The possibility of a rate cut in September is now pushing about 95%. Before he started talking, it was around 68%. Markets have taken this as a positive. The markets are setting all-time highs. We're even seeing a resurgence of the Russell 2000 index, or another way to think of it is IWM. As a matter of fact, IWM today is up about 1.7% or $3.64. That's the ETF that tracks the Russell 2000 index. And Goldman Sachs came out with earnings this morning. We have Morgan Stanley, Charles Schwab. We have a whole host of banks that are going to be coming out. Interactive Brokers are going to be speaking. Ally's going to be announcing on Wednesday. And who else do we have in here that's worth mentioning? That pretty much covers the plethora of financials that are going to be announcing earnings. We're going to do a speculative trade on bank, BAC, good old Bank of America. And then on Thursday, we have the kickoff of the FANG stocks, which I don't know if anybody's even using that term anymore. But you have to use the FANG stocks when you talk about Netflix, because Netflix is not a part of the MEG 7. So on Thursday after the close, they're going to be announcing. We'll be looking at a trade in that underlying stock. But I want to change things up a little bit. You do a lot of butterflies around earnings, but Bank of America is a lower price stock. I'm not talking about PE ratios or stuff like that, but it's a $40 stock. And because of that, it's not as enticing to do butterflies on, bluntly. You want to be... a higher price stock is a more interesting trade, all to do with the dynamics of the option pricing. So what I'm going to do in bank, and I would do it closer to the close if I had my rathers. I'd rather be closer to the close because we're going to be announcing in the AM tomorrow. But I'm just going to do a real simple trade, feeling a little bullish in the financials. Now, the news has been mixed. Loan growth isn't that great, but interest rates are supposed to come in a little bit. Wells Fargo kind of got beat up because loan growth was dropping a little bit. JP Morgan came out. They were kind of flat after their earnings. And so far, actually, let's see. I didn't check to see where actual Goldman Sachs is at right now. So that is up $7 or about 1.5%. So once again, just kind of, and they announced earnings this morning. And so we're just kind of mixed a little bit in the financials. I do feel a little bit more bullish on bank today. And I want to do a very simple, almost 50-50 type trade. So we're going to deal with time value. Time value is going to be a big deal today. We're going to buy less time value than we're selling. And we're going to do this with a long call spread. So let's move over to the TradeHawk software. And in that software, we're going to look at the nearest term expiration, which is the July 19th expiration. That's 4 days away. They're announcing on a Tuesday. So you got all day Tuesday, all day Wednesday, all day Thursday, all day Friday. We're only trading at a 44% vol. It's not a ton of vol considering earnings, but that's normally the case for a Bank of America. If we look at the expected move, it's just a couple of bucks, if that, right? So the market's at 41.95. We can actually go in and buy this contract and buy this contract. So this is the call. most at the money, near term expiration, July 19th, which is this Friday. And here's the put on this side. And you're looking at $1.59 expected move. Like I said, implied vol isn't really that high. So let's do the math on it. $1.59 divided by 42. We're talking about 3.7, I guess, not too bad. 3.7% expected move after their earnings announcement. But that's not a ton. So we're going to look at doing something where we're going to be positive on the marketplace. But if we're flat to positive, which I think that's really been the feeling so far in a lot of the banks, is the more of a muted move after their earnings. So we're going to buy the 40 strike call and sell the 42 strike call. So we're selling the at the money option contract and we're buying just in the money. So let me get rid of my long straddle down here. And let's change this up. Here we go. This is going to be the official paper trade for today. We're going to be buying the July 9th expiration 40 strike call. We're going to be selling the 42 strike call. We're doing this for a net debit of $1.36. We are buying 20 cents worth of extrinsic value, otherwise known as time value. And we are selling, well, this is all time value because it's now out of the money by 5 cents. So we're selling 78 cents worth of time value. What does that mean? We are paying a debit for this. For every 1-by-1 long call spread that we do, we're gonna pay $1.36 for it if we can fill at the midpoint. And the markets are going to be, you see all the open interest and all the volume, tons of volume, but tons of open interest. So that should be easy to fill somewhere near the midpoint. And when you buy less time and you pay for more intrinsic value than you sell, it means that your break even point will actually be below the market. So to get to break even, we take 40 and we add the 136 to it. So that's 4136. Market is at 41. We'll call it 42 minus 42. So we're 64 cents. The market can actually go down after their earnings report, and we could still break even at expiration if that did happen. So 64 cents is the leeway, and that is basically the difference between the time value that we're selling and the time premium and time value that we are buying. And that's straightforward. So interesting to do a positive theta trade, a positive implied volatility. You want implied volatility to come in after this trade, which usually happens after earnings. This is the way I would like to speculate. And we don't have a 50-50, situation. If we straddled the market, that would be the case. If you wanted to get a little bit more speculative, if you will, you can come in and actually just move this up, buy the 41 and sell the 43. And in that case, you're probably paying $1 to make $1. Here, we're going to pay $1.36 with the potential of making the 1.36 is 64 cents on the upside. And I knew we just did the math. We had that number. So 64 cents on the upside. But if the market stays where it's at, we can still be profitable on this trade. We just don't want the market to go down. If the market does go down, it's got to go down more than the expected move to the downside to lose everything, right? From 42 down to here, the expected move is $1.50. That's 2 points all the way down to the 40 level. So if it trades somewhere in the middle, we're okay. I like this scenario because of the lower implied lower relative than a lot of the other financials that are announcing earnings. So we have a 44% implied volatility. The historical vol is usually about 23% on Bank of America. And this is the way I want to get bullish on a very short-term speculative trade. Now, if you have any questions, you can put them in the chat box and we'll try to address them. And if not, do we have any out there? And if not, well, that's going to be it for this edition of Options Guide TV. We're going to come back on Wednesday and we're going to look at a Netflix trade. because Netflix will be announcing on Thursday, and we don't have a show on Thursday. And you can watch that on x.com. We're now streaming live on x.com. You can also check it out inside the Tradier Hub. If you log in, you can ask questions from inside the hub. And then also, if you log into your YouTube profile, you can also ask questions on the Tradier YouTube channel. Thanks for stopping. We'll see you this Wednesday for the next edition of Options Guide TV.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.